Welcome.
You know, sad thing is gone, Jimmy.
What's going on? With the picture of you and I?
Yeah.
It's gone. It bugs me. I liked the picture of you and
I mean, I was jokingly complaining about it, but
yeah, I thought you were joking. They took you seriously. People who are watching, please tell them tell our producers we want the picture back. Anyway, this is Iuorio and Bob Iaccino. This is Tradier's The Trader's Edge. Thank you guys so much for the support you've given us this. Remember, this is an interactive show. Ding us with questions all you want. We love it. Bobby, the stocks just keep grinding up against what I think is resistance. Do you think it's going to give?
I don't know. I mean, I think that the bull market, let me rephrase it. I think it is a bull market, but as we've talked about before, I think a pullback is probably just okay. I don't think it's the greatest thing in the world for this time. You know, you look at some of the data, and one of the things that we've noticed is that the soft data looks good and the hard data doesn't look so good. So that to me is typically a time where the soft data kind of catches up to the hard data over time. So that's the part about it why I think there's probably some downside. I think we're probably going to see downside the rest of this week in some of the major names. You know, we had pretty good, strong activity in the NASDAQ today, but some big stocks were lower,
Tesla.
like Palantir, Paychex. Some of these guys were negative.
Tesla got smacked, and I'm long that call spread.
Tesla got smacked
too, so yeah. that was painful for me. Yeah,
Mike Arnold talked about Tesla and that Head and Shoulders that was there, and it broke today. So Mike,
and I was planning on getting out of the call spread, but I have the day off because I'm running my basketball camp. I'm a high school basketball coach. Did I tell you? So I didn't trade this morning. And instead, I was at the basketball camp, and those damn girls cost me a lot of money because I would have gotten out of my Tesla had I not put in the report. But anyway, as I've said a million times, I'm going to say it again. You've seen Bobby and I in media for 20, 25 years. You may think we're full of shit, and that's fine. There's probably about 20% of the time where we think we're full of shit ourselves. But one thing you cannot deny is that somehow these big name people come on our show and they say yes. And today is going to be no exception. And we are just honored to have with us Tracy Schuchart, who is a senior economist for Ninja Traders, who we are good friends with and love those guys. Let's bring on Tracy. Now the picture's back. You saw it, right?
I did see it. Yeah. They just moved where they put it.
Okay. Yeah. How are you, Tracy?
Hey guys, my favorite Chicago clan.
Good to see you as always. How are you? Everything good?
I am good.
Good. How was I know you moved across the state. Do you like it?
I do. I'm still getting used to it. I don't know. I'm still trying to, get your friend over here to go out. So,
wait. You will. Just keep on him. Yeah.
Yeah, I'm not going to be too far from you a little bit after work tonight, to be honest. So I'll reach out.
Cool.
Yeah.
One last thing. Bobby, you asked the first question. I want to retweet. So get more of the guys to let them know we're here.
Yeah, I don't even know if I did that in the first place. So what do you think about the question? You heard the question Jimmy asked me, Tracy. What do you think about the resistance pound up that the equity market has done? You think it's going to break through it, or you think it just needs a rest?
I think it needs if it stalls, it falls, right? So I think, this price action that we're seeing today in the indices, particularly, yes, this has been probably the shortest range we've had in a very long time, which is
very short. Yeah.
Right. And if you look at volumes, volumes are relatively low. Actually, for the last 2 days and today, we're seeing declining volume. So maybe it's that, beginning of summer, kids just got out of school. I don't know what it is exactly, but, I think that we keep bumping up here, stalls, it falls. We'll see what happens. I don't think it's probably going to be a huge move down. Well, barring any unforeseen tweet that may come out or headline, but we've made a significant move higher, especially looking at the daily chart. So, hey.
So you just hit on something that's been a theme of mine. So 2025, I thought was going to be a tumultuous year in markets and economically and in the political landscape. And so far, I think that's reasonable to say it is. One thing I've said, and I want your comment on this too, is I've said a million times that I do not think it's appropriate for the president of the United States to be just releasing these headline bombs that shock the market and send volatility waves through every market. That being said, I think that bear markets and even steep corrections are born of complacency and lack of respect for risk and volatility. The fact that he can throw this roundhouse punch at any moment in time, I think people will eventually be on their toes, and it could make for a more durable rally once we get used to it. Is that an idiotic take, or do you think there's any truth in that?
No, I think it's true. I think the markets have forgotten sort of what his first presidency was like, right? And this is take two, but larger than life. So, this is kind of this is what we saw back in 2016, 17, 18, right? Especially when the China tariff were going on at that same time in 2018. We saw a lot of volatility in the markets. I know that people seem to be taken off guard, but really this isn't anything that we already haven't experienced.
Right. So the follow-up to that is that my sincerest hope was that the market would be numb to these things when Trump became president again and just kind of ignore them. But then I've come to the realization recently, the market doesn't want to be numb to it. Some of the biggest players, they like volatility. So they're quick to jump on board and be like, pretend there's a panic going on because of something and push the market in one way or the other. The market seems fine with the volatility. Yes.
Well, traders certainly are.
Yeah.
We have,
it, right? Yeah.
We on Ninja Trader Live, obviously we have a lot of day traders live trading the markets, and today they were not pleased. They're used to 200, 300 point moves in the Nasdaq, and that just didn't happen today. And so traders are loving it. Everybody else, not so much.
Right. Do you think, Tracy, that we talked about the 0 DTE options in the rundown, the Tradier rundown? Do you think this sort of focus that's been, I think it's been building, Jim, I don't know if you agree, over the last decade or so, about this fast in and out trading? One thing I noticed when I left the trading floor is the best way for me personally to continue to make money was to widen out, not tighten up, right? And I think it had to do, my theory in my own head was that I can't compete with high frequency traders. So why am I trying to go fast here? Let me just shrink my position size and go slow. Where do you fall in that?
So, I think in these kind of volatile markets, I find I kind of have the same approach, where my approach is, maybe tone it down in size, but widen my stops and things of that nature, because otherwise it's just not a market that, unless you're an absolute scalper, right? You have to be ready for this volatility that we have seen. And it's just, as kind of these 0 DTEs have grown, you have to look at what market makers have to do, because they're on the opposite side of the trade, right? And so if, everybody's long calls, market makers are on the opposite side of that trade. And if the market moves in the wrong way to them, they're short calls, so they're short the market. They're going to have to go into the futures market and buy if the market moves above, and vice versa. And so that also contributes to some of these outsized moves, is just how hedging activity is being displayed in the options markets.
Okay, so hold it. So is this the same thing I just said about Trump tweets? Because Bobby and I, when we talked about 0 days expiration, and because I'm a crabby old man and I want to be like, kids and your new toys, you're going to run into trouble. However, I think the same thing is that it's causing intraday, single day volatility, but that may translate to less volatility quarter to quarter. Am I crazy there?
No, absolutely. You can. I mean, it depends on what kind of chart and the length of time you're looking at. You could say, well, somebody could look at a chart and say, well, we're still below all-time highs if you want to filter out everything else in the market. We really haven't moved, right? I mean, you could say that if you're not looking at the charts and you just saw the day-to-day price. So, which some people do.
If you're just an investor, just check the market at the end of the day.
Right.
Yeah.
Where's the most opportunity right now, Tracy? If you were looking at all the charts you look at, Where's the most opportunity today as it sits?
Well, you know me. I'm going to say the
I do.
commodities markets.
That's what I was waiting for. That's what I was waiting
Commodities
for.
markets and equities tied to commodities.
But you're not
So
going to
you,
say crude yet, are you?
I am not bullish crude right now.
neither am I.
I do think there's opportunities in the refiners, but as far as actual crude, do I want to go long crude here? Probably not. You know, it seems to be in its little happy place between, 60 and 64, generally speaking, in this band. That works for everybody. Maybe not as high as people want, but it works for shale producers. It works for OPEC. Brent's a little bit higher. It's not the ideal price, but it's okay.
What do you make of the 2, or I should call it 3-day move based on the Canadian wildfires? Was it just completely offset with the idea? I had somebody say to me that's pretty big in the space, say that he was actually relieved at the 411,000 barrel pace that OPEC is going to increase production, because he said they're not flooding it like they could. So what do you make of I really am talking about the last like 3 or 4 days.
Yeah, well, I think some people are saying, well, it offsets the 350,000 barrels a day that are offline right now because of the Canadian wildfires. But if we really look at, this 411K, you have to understand also we're heading into summer where demand for crude oil, because crude oil is used for energy power burn for air conditioning, right, in the Middle East. And so you see domestic consumption always increase in those countries in the summer anyway. Then you have Haji, I don't know how to pronounce that right, Haji, that the trip to, wherever the sacred trip to Saudi Arabia. And so you have literally hundreds and thousands of people going to Saudi Arabia this month, and you need hotels for these people, you need whatever. That's a lot of air condition burn, a lot of, so that's a lot of domestic usage. And if we actually look at exports from May, which is the last data that we have, obviously, from Saudi Arabia, their exports are actually down, even though their production has been up both April and May.
It's really interesting, Jimmy, to see the price of crude oil now. Somebody called me and said, why do you think it's not breaking out? I said, draw a horizontal line at about 63.90 or so.
Okay, I was just about to bring up that level. Yeah.
Yeah, and then just start going back in time and seeing how much work crude has to do to get through that level.
Okay, so tell me this then, because this is going to be a question to both of you, and I'm going to start with you, Bobby, because I look at that chart and all the rejections of even the last few wicks that are there. What about, let's say we get a settle above 64 and a quarter, 64 and a half. We feel comfortable there. Do you think that could be the sign of a next move? No? No,
and the reason is congestion is I'm talking about technical congestion, price action congestion. Is made up of a lot of little candles with little highs and lows. And just because you broke through the bottom of it doesn't mean you won't fail at the top of it. Doesn't mean you won't get stuck in it. It's kind of like changing lanes, and then you see the cars in the lane you were just in go past you. That's what happens. It really has to break into what Mike Arnold calls a clear path of past price action. There is so much. And honestly, somebody asked me, where do you think the market believes supply and demand are balanced? I said, going back 2 or 3 years, between 60 and 68. That's what seems to be a comfortable level for long stretches of time for the market. And then we have disruptions in one area or the other. Tracy, how far back do we have to go before you're talking about, above 80? You got to go back to what, 2022?
Above 80 is going to be, I think, if we see above 80, something really bad happened.
Right.
So you don't want to really see that. I think because how the market is currently positioned, if we get above that 65-31 area, at least on my chart, you could see somewhat of a short squeeze, just because that would be a pain threshold area. You know, if it gets just above 64, I don't know if that's going to squeeze anybody out of the market, being that they've been in that position for so long. But if you start saying, again, I think 65.31, 66.14, I have, you might get people uncomfortable in exiting their short positions.
So you mentioned refiners a second ago. Can you give any specific names that you're looking at, or that's not a conflict or anything, right?
So no, it's not a conflict. This is not trading advice. I'm currently long Dino.
What is that? Can you explain what that is? I don't know it.
DINO. It's a refiner.
It's a refiner. Do they pay you a dividend too?
Sinclair, yes.
Yeah.
I like dividend stocks right now a lot.
It's good. So you mentioned commodities before. So gold has been a beneficiary of central banks buying over the last 3 years at a rate they haven't done in 75 years. That's one of the reasons I jumped on board. I also have almost no confidence in stewardship of our currency. Scott Besson, even the other day, comes up and says, it almost like he was like taunting us when he said, well, when you buy U.S. treasuries, you're always going to get paid what we owe you. Wink, wink. Yeah, those dollars might be worth shit. The same dollars that's lost 80% of its value in the last 50 years on an average of 3.8 per year. But anyway, the point is then when you look at that, their historical record for stewardship of our currency, you say to yourself, is gold still something you want to be long, and to what price? What's the fair price? Where do you want to go?
So, what is the fair price of gold? I don't.
Who knows, right?
Who knows?
Higher.
Higher, exactly. The chart is telling you higher. So, not here.
Jimmy, what's that phrase you just used? 3.8 what? $3.8 what?
The dollar has lost 3.8% of its value per year for the last 50 years on average.
And then you add 2% price inflation to that.
Yeah.
It's probably not the correct economic math, but you're talking about an overall devaluation of the consumer somewhere in the range of 5.5%.
Here's my rant for the day. And you guys, the U.S. will never default. The U.S. essentially, if you look at that and they're paying you back in cheaper dollars, that is a soft default. And by the way, the dollar is still king. Nobody is replacing it. And the reason they're emboldened to do that is because every other central bank on this planet is so stupid and doing the same sort of nonsense. Anyway, I'm fine. What do you want to talk about now, Bob?
Well, I want to continue the conversation with gold. I want Tracy to tell me I'm stupid. I think the fair price for gold right now is about 10,000.
Tell me.
Now I don't think it's going there today, but the reason I think that is because all this optimism about inflation is starting to kind of, if you watch the long end of the curve, we're still down a little, but it's not on a downward trajectory. You look at some of the data, some of the core data, not quite turning around. I'm not ready to go back to 4.5 to 5% inflation. But what I am ready to go back with is even the administration that claims to want fiscal responsibility is now about to pass a pork-filled spending bill that's going to move the deficit to 6.9%, which is higher than where it was last year, and the highest level if you take out the COVID years since 2011. So you add to that, to me, the thing you just talked about, just the outright devaluing of the dollar, the fact that the Fed wants inflation. Yeah, they only wanted a 2%, but they still want inflation. And here's the conspiracy part, Jimmy, you'll love. And this is to Tracy, but this part's gonna amuse Jimmy. A lot of people out there are saying that if there's going to be some sort of an attack on the U.S., it can't be military because we'll smoke everybody. It'll be an EMP. Where's your Bitcoin now?
What's an EMP?
Electromagnetic pulse.
Yeah. Okay, right.
I mean, if you don't have a computer, you can't go, here's my cold wallet, pull, with a toothpick.
I swear it's in there.
I swear it's in there. So Tracy, where are my nuts besides the EMP attack and the Bitcoin wallet?
I'm not going to touch the Bitcoin story, but
because you'll get hate.
I mean, it's just
you're a nice person.
It's outside of my wheelhouse.
Yeah.
Let's put it that way. I would say, though, I do own some.
Widge just complimented me, so I can leave the show.
You're gone.
Widge is freaking smart.
Yes.
So,
Luis, can you put that up? Because I want everyone to see that.
Boom. Spot on, Bobby. Nailed it.
Yeah. By the way, hello, Remo. Go ahead, Tracy.
All right. So, where do I approach this? No, I think gold is absolutely going higher. I'll address that. The chart says it is. It's going higher. I don't see the thing that makes this gold market different than prior kind of gold spikes is that this is now a fundamentally driven market where you have actual central banks buying. I mean, Poland now owns more gold than all of the EU, right? And so you have a fundamental where other spikes were kind of paper driven, right? It's paper driven market, which is very kind of different than being actually fundamentally driven. And if you look at Asia particularly, you're seeing China at Chinese citizens, not forget PBOC that is also buying, but Chinese citizens, and not just in China, obviously always in India, gold's been a huge thing. It's part of their culture. But now you're seeing this buying in China. And so you're seeing this actual physical retail demand, which is very different than we have seen before. And, that kind of makes sense. I was talking to Tony Nash earlier today on Mic Drop Markets, and he was saying, they're not allowed to hold or buy or sell dollars. So what else are they going to hold if they have distrust in their currency, which given what's going on economically, that makes sense. And so they're buying gold. So to me, this is a very different driven market than we have seen in the past.
So to put what we're saying about gold for you guys listen to is just some statistics. In 2019, the federal government's budget, the money they spent, the full amount was 4.4 trillion. That number in 2020 ballooned to 6.8 for obvious reasons. And by the way, I hate when people say due to COVID. It's not due to COVID. It's due to asinine, knee-jerk panic reaction from the government or nefarious from the government. You take your pick. It's one of those two things. But anyway, it balloons to 6.8 trillion. It stays there for the next, and now we're supposed to go up. What the hell is going on? That's why the gold trade and the Bitcoin trade, to me, are just an exclamation point after the phrase, we do not trust the stewardship of our currency. There's my rant for today, too. So what about that? This is the question I was going to ask, though. Silver starting to move, platinum butting up against very, very serious resistance, in my opinion, and it's rallied nicely. When I look at it, I say to myself, is this because the market's saying that because these are industrial metals, because the economy is going to start booming globally? Or is gold just gone so high that, if this is like, a cakewalk, now we're going for the cheaper items, the cookies and the donuts instead of the best cake? What do you think?
I think it's a combination of everything. And I was going to address that earlier when
I cut you off so rudely. I'm sorry.
When Bobby was talking about inflation, because I was going to say, I think we're going to see an uptick in all of these commodities, which is going to contribute to inflation. So I don't think the inflation story is over, even though everybody's, there are a lot of people that say deflation is in the cards. That said, now let's move to silver and PGM metals, well, specifically platinum. There is a fundamental story behind those two. They are going to be in a huge deficit, platinum, a huge supply deficit for the third year in a row. So you have that story. But what we are seeing is retail buying also in platinum bars and coins and silver bars and coins to the extent that we have not seen. Partially that reason is because they are cheaper than gold right now. And even though they are industrial metals, they're still store of value metals. I mean, you could argue differently on platinum because that's been mostly used for jewelry, not for money. We have used silver and gold as money, right, before. So I think the landscape for those two is a bit more complicated because there's a lot of things going on with that market. And if we look at something like platinum, for example, now, platinum is used in a lot of industrial means. So if that price goes higher, that means, catalytic converters for diesel engines go higher, things of that nature. And if we look at the silver market, now, silver is used in a lot of medical, a lot of dental, a lot of renewables. And so if prices go higher in silver, that makes those products more expensive. Silver is also used in every circuit board. So that then makes your chips cost more. So I think that's why I think that, because I think silver is going to break out, because of not only because it's industrial purposes and because we're in a supply deficit, but we're suddenly seeing this retail demand for it as well. And so if it does break out, that's going to add to inflationary pressures for all these other products that it's included in.
So I'm going to give you guys a stat here that is probably a little bit of cheating, but only 43% of the physical gold that's owned is for investments. Now, I'm talking about all the physical gold that's out there. The other 57% is used for other. Okay. What I mean by other is that, and that's the intrinsic value of gold. Now, within that is central bank holdings. So that's the cheat, but that's about 12 to 15% of it. So it's still upwards of 40%. Talking about the same thing. Silver, and Tracy, it might have been you and I that were talking about this last time I was on your show, was that silver has become more an industrial metal than a precious metal at this point, easily. So the economy,
sure. It tracks copper step for step. But anyway,
it tracks copper more than it tracks gold now. The gold-silver ratio keeps moving. Gold, on the other hand, it's one of the interesting things. I looked at gold on the Costco app the other day. Some of the gold bars out there, most of them were sold out. And there was a thing that said, let me know when it's back in stock. They don't do a better job than, any of the reputable metals dealers out there in terms of the price. Price is the price. But people are buying them. And normally when you see your Uber driver or your cab driver, as we used to say, talking about a particular asset, that was a negative. I think it's the opposite for gold, because people can hold it and that intrinsic value is there and it can be explained to people. It's less for that with platinum and palladium. I think the intrinsic value, it's one of the highest intrinsic values, but it's hard to explain it to the average person who might just buy and hold it. So do you guys think I'm nuts on that, or does that make sense to anybody?
No, that makes sense. But we are, again, I'm just saying, if you look at the retail data, we are seeing an uptick in demand from retail customers for physical platinum, for physical silver. Palladium is a totally different, I know it's in the platinum group metals, but that's a totally kind of different metal, because they don't use palladium for jewelry, and a lot of retail doesn't even know that it kind of exists. And the fundamentals in that particular market is, it's a pretty balanced market right now.
To that point, I think you made a great point about it not having been used as money, because Florida, as you guys know, I know Tracy knows,
yes,
just actually passed a law that recognizes gold and silver as legal tender.
And so, not the only state too.
Yeah. So on the one hand, I thought I might go to the grocery store today with a gold coin that I have in my house and see if I could buy, $3,390 worth of groceries and just go ahead and hand it to them. Right. But what am I going to do with that? And I also think that spending an appreciating asset on depreciating assets, like I thought I'll, grab, 10 gold coins, see if I can go buy a car with it. Just walk in the dealership and go, you want these? It's legal tender now. The fact of the matter to me is it's like, seeing a 7-foot guy and going, I need to tell people he's tall. Gold is money to me. It really, really is. So I got a question from Remo that I wanted to ask you guys. It's stock charts, if you guys don't follow him.
He's a good follower, good guy. And right after this question, Luis will do the banner.
Yeah. I don't think Luis is listening because he didn't put Remo's question up yet. Any comment on Ray Dalio's debt crisis comments on CNBC? Did you guys see that?
No, what did he say?
Okay. Ray Dalio warned that America's debt crisis is urgent and approaching a critical point. He described the situation as an economic heart attack. He highlighted a dangerous imbalance between the supply of U.S. debt and global demand, warning that the government must drastically reduce its deficit from about 7% to 3% of GDP. Again, the scoring from the Congressional Budget Office for Trump's big, beautiful bill takes 6.9%. To avoid a shocking development such as a forced debt restructuring or other drastic measures, the rest of it is fluff. What do you guys think, Tracy?
Well, I'll answer real quick. Remo, we've been friends for 10, 12 years on Twitter. Do you think I'm going to contradict anything that he says there? I've been gold, silver, real estate, Bitcoin, everything that is a vote of no confidence in the way we are issuing debt. Yes. So I think, by the way, Ray Dalio has got to get better friends, someone to tell him that that's a dumb hairstyle. Okay. That's why you hang out with the kids you hung out with from grade school. Because when you're being stupid, Jack, whatever Jack's name is, who's the tech guy, that beard has got to go. Ray Dalio, you got to get a better hairstyle, but you are 100% right on this. Did I get any of that wrong, Tracy?
I'm no comments on the hairstyle.
I love your hairstyle, by the way.
No, I think, Jamie Dimon came out and said something similar. Gundelach said something similar, but they were talking about the bond market. And I think that's been in the cards for a while. I think everybody knows it. I think it's, how to time that, if and ever, unless we can somehow reverse course. So I don't think this is a conversation that people haven't been having for quite a while by now.
Luis put the banner up. Take a quick time out. You guys, by the way, we are so honored by the support you've given us. There is a favor you can do for us and for Tradier. Please try Tradier Pro for 3 months for free. There's absolutely no obligation. Please just scan that code, sign up. We have talked to options traders, the most advanced options traders we know, up to beginners. Tradier Pro is the way to evaluate options and to trade options. It is a fantastic system. Consider it as a favor to us. It is free. It is a 3-month trial. That's it. That's my pitch. Okay. So another question is that we've been talking about gold quite a bit. And we just talked about Ray Dalio's comment. I got off the phone right before we got on the show with one of my good buddies. I have about 10 different people who I advise on their retirement strategies, et cetera. He called me. He said his investment guy who says, but buying and holding physical gold is stupid. He said, holding physical gold, you might as well just have a gun and a bunch of ammo, because if the shit ever really hits the fan, you're going to want the gun more than you want the gold. By the way, I think the guy has this much of a point. Here's where I think he's wrong, is that what we are planning for is not necessarily for the end of the world. We are planning for when people start to feel that the end of the financial system or some sort of significant pothole is coming up, and what they're all going to do. And they're all going to go buy gold. So we want to do it ahead of them. What am I missing here, Tracy?
No, I mean, I think I've long thought holding physical gold. I have physical silver, physical platinum, physical gold. I mean,
what's your address?
I go. It's not at my house, don't worry.
Good.
I don't think, I'm not a doomer or a prepper or anything of that nature by any stretch of the imagination, but it makes me sleep better at night, and so we'll go with that, right? It's not terrible to have like a security blanket. I hope I never have to use it. That would make me very happy, right? Because that would mean something really bad's happened. So, but it's a little security blanket. So that's how I feel about it.
10-year return on gold is 186%. Actually, it's closer to 187%. 5 years, 99.9%. 2 years, 34.9%. 1 year return, 40.8%. How does that match up with guns and goats and the end of the world? People, to me, financial planners who say that it's dumb to own gold are dumb. And the reason I say that is because they see it as just a prepper thing. The dollar's going to be worthless, blah, blah, blah. Jimmy Iuorio, a guy I know that, he's smart, but I don't really like him that much, said
he thinks he's way smarter than he is.
That the dollar has dropped 3.8% per year. So you own, I'm not against owning stocks. I own a lot of stocks. I own Palantir right now. I own Paychex right now, individual stocks. And then we could talk about that if you want. And then
let's not go there.
Okay. And then I obviously have funds, retirement funds and different things. I own a lot of stocks, but the idea that you have to be a prepper to own physical gold tells me that you should tell your friend this may not be the right person to manage all your money. Warren Buffett said, gold doesn't pay yield. It doesn't make anything. And Warren Buffett owned McDonald's, whose CFO had an affair with like a teenage intern that hit the stock. Gold doesn't do that either. So, and by the way, gold has outperformed Berkshire Hathaway in isolated years. So it's one of those things. It's ignoring the entire story for gold. That's number one. Number two, actually, that was a long number one. So number six, I actually at one point, just on a whim, had to go do something, had lost my wallet. I had actually lost it in Chicago and I was back in Florida. Like, crap, I need money. The bank is going to need my ID. I took one of my gold coins and I got $1,900 on the spot that day in cash. And I went and got groceries and gas. It's not prepper stuff, man. It's actually a real thing. So play this for your friend. Tell him to go back in there and go, I don't think you're that bright. I think you operate on a formula.
There's no doubt about it.
That's what he should say.
Yeah.
No, I mean, he doesn't.
He's dumb, Tracy.
They don't make money if you're just investing in gold, right?
Well, do that. I mean, over the last 10 years,
cheap, right? They make
the last
money
10 years, if you only own gold, you had 186% return. Actually, it's 186.9%.
But I'm just saying, as an investment advisor, the guy's not going to make money if you go out and buy physical.
Oh,
I'm just throwing that in the mix.
Sorry, I misunderstood you. I must misunderstood you. Yeah.
Yes.
Okay, here
let's investment advisor. He's dumb.
Yeah, because I think he is dumb. And my buddy just sent me over all his holdings and stuff, and I'm going to go over them with a fine tooth comb, and I'm going to explain it to him again. I want to switch. We talked about the platinum metals group, and I gave a speech at the New Orleans Investment Conference.
Yes, you did.
And about the platinum metals group. And they have rallied since then. So it was this much right, particularly when the stock market has been in kind of a tumultuous spell. But I'm giving another speech this year, and I'm going to say that the upsides might be limited. This might surprise people, which, by the way, there's going to be pay for the conference because there's going to be a kick to it too. Because I fully believe with fully autonomous driving, in 10 years' time, that there is going to be much, much less of a need for cars. A lot of the platinum is still used for catalytic converters. You mentioned a lot of other uses for platinum as well. My question to you is, if I am right on that thesis, is that a big enough vacuum to pull it down, or is the precious component of it and the other uses of it important enough for platinum to continue its rise?
I think that is to be determined depending on what's going on economically. Yes, I agree. We have EV adoption. You're not using enough platinum. You're probably going to get, since platinum's really used in a lot more catalytic converters for diesel than it is for actual passenger vehicles. If we see more LNG trucks or automated trucks, yes, I agree that demand will go down. That said, I think we have to see if it does turn into more of an investment vehicle. And then I think we have to see, because there's a lot of other technologies that are going on that in battery technologies, particularly that make use of silver and platinum. Good. That are not mass produced yet. They're still in the kind of exploratory stage to see if they are viable. So it really depends on kind of the new technologies that are coming out that are making use of silver and platinum specifically, because you never know what's going to be the next lithium battery, right? That's used in everything. So.
Right, exactly. Bob?
By the way, back on gold real quick. There are non-reporting facilities that hold non-reported inventory, meaning if you had your gold somewhere, and I don't know, there was someone trying to figure out if you made any capital gains that year. I don't know who it would be. They wouldn't necessarily know about it. So real quick, Jimmy, did you say platinum?
I like how you just slid that in there real quick.
I don't know the details.
I cheated your taxes, which we would never do. I said platinum. Platinum and palladium was what my speech was about. I kind of put them together. I know one's more for catalytic converters for diesels, one more for catalytic converters for just regular internal combustion cars. But I was kind of grouping them together. Is that your question?
Yeah, I wanted to know which one you were talking about specifically, because
it was both. I was at that conference with you.
You were at that conference. Yeah, thank you.
Yeah. So as they start to, let's say that you're right, and I think you're right. I'm a huge fan of self-driving. I can't wait for that. I'll be able to have drinks with Tracy and then just go take me home. And
I can call Uber. Oh my God, never.
In a weird way, Tracy, here's how I look at it. You ever Uber?
Well, of course I Uber all the time.
I trust the computer more than that freaking Uber guy. I do. I just do. I mean, it's like there's a guy and he's over there and he's going, so what's your name? Well, that's what they say to you. They don't say that to me.
No,
But
you
how
press
long
the
have you
button
lived
that
for?
says, please don't talk to me. They
Yeah,
give
they
you
talk
choices.
anyway.
Like, I don't want you to talk to me.
I'm just saying, like, I know some people who are Uber drivers, and I would trust a computer before I trust them. That's not disparate. Actually, I lost money on Uber this past week. So yeah, I am disparaging them. But what I've been reading lately about platinum is that as it goes away from catalytic converters, it's being used in hydrogen fuel cells, which is not just being used in cars. It's being used in what's called electrolyzers for green hydrogen. To Tracy's point about new technologies, it may not be a binary over the long term. May actually be one of those things where, they're not using, there's not a lot of catalytic converters anymore. Why is platinum going up? It could be because the use in medical applications. It's actually being used in anti-cancer drugs. The metal is, which is strange.
It has a lot of uses. I think I wrote something.
Thermocouplers and sensors. I just made that up, but I think it's in those.
I've written about platinum over the years quite a few times.
Yeah.
Nice. And again, the charts, it looks like we are close to a massive multi-year breakout.
It does.
And if that happens, I will be, I am long platinum and plan on being even more long platinum if it gets the breakout that I want. What else do you want to talk about, Robert?
Well, I want to answer or really put Widge's comments up, Luis, if you could, this last comment. Non-traceable assets. That's what sparked me to talk about the non-reporting inventory. Non-traceable assets are a hedge against all the central banking and taxation schemes. It's easy to understand the desire to own physical metals and utilitarian assets. I wish Widge would come out of the shadows, Tracy. I don't know if you follow him.
By the way, if I was smart and had good words, I would have said it just like him. Yeah.
He's spectacular.
Right.
But yeah, he's a super smart guy. We've actually tried to get him on our show anonymously, and he's no, I'm going to stay back here and be smart, which I completely respect. I want to ask about a couple of stocks, Tracy. Palantir and Paychex are two stocks that
going to Palantir, please.
So I had a friend, and his name's Tim, and Tim watches a lot of our shows. He usually comments. He must be busy with one of his commercial banking deals. But I remember telling him that I had bought Palantir, and this was in like February, mid-February. And he goes, I wouldn't buy a used car from Alex Karp. And I went, here's the thing. I'm not buying their services. I'm buying their stock.
But
right?
It's supportive of their services.
Fair enough. But in fairness to me, the stock went up 20.02%. I caught about 19% of that. So I say this about Jim Cramer all the time. And I think I made our guest last week mad because I think he just got upset at the way I said it. Jim Cramer talks about who's a good CEO and who's a bad CEO. I have no idea what they're doing, except what I read.
Neither does Jim Cramer, by the way.
Neither does Jim Cramer. Now, Tracy, I know that you know things, and sometimes you're willing to share them, and sometimes you're not. Talk to me about Palantir and why you wouldn't own it. Why you wouldn't own it long term.
I think it's just there are some stocks I just cannot fundamentally dig into my soul to buy.
That's fair. That's a fair statement.
And anybody can do any research they want on Palantir. It's all out in the open. I mean, there's nothing hidden there. I just don't like the agenda. And, again,
they are about killing people.
Can't do that.
Please explain. A lot of people don't know what Palantir does, Bobby.
Palantir, a lot of their software, like one of the interviews that he recently did, this is his words, and they do a lot of stuff, right? They have a really good ability to assimilate data. They're a lot faster at it than anybody else. But a lot of it is going to defense. And they have an arm of it where he basically said, we're an intelligence defense tool, and we're used for counterterrorism to basically kill people before they kill us. He actually said that in an interview. Sure. I'm paraphrasing, but he said, kill them before they kill us. So I'm smiling at that. I shouldn't be, because I don't think of it that way in my heart, but in my face I do.
Well, another show we talked about buying cigarette companies. We talked about me owning a bar, selling to sometimes people who have alcoholism issues.
Tracy and I are both positive cigarettes and bars, though. But
yeah,
I don't
cigarettes and bars and defense. I don't know. These are ugly stocks to own. I'll give you that, Tracy. Is that why you can't own it?
No.
Is it because they want to kill people?
And store all your data and yeah.
Okay,
you know.
yeah, that I get that part. Which, by the way, that's when you shrugged
By the
about
way, we're on
self-driving
YouTube,
cars.
right?
You hate that it's a reporting mechanism too, right? And you hate the Big Brother aspect.
Self-driving cars, yeah.
Yeah.
Also a reporting mechanism, a tracking mechanism.
Yeah. Well, again, I bought a car. Yeah, my wife, by the way, Tracy, my support of full self-driving, and I agree with you 100% about Big Brother government, but we are, as a species, shitty drivers, and a person dies every 12 minutes. 1 year ago, almost to today, was Bobby and I were on a show, and I get a text from my wife that she's just been slammed by a woman who was on her phone going through a red light. It was basically a year ago, took the whole front end of the car off. It was a crazy, crazy crash. Yeah, I hate the fact that Big Brother is going to be reporting on us, but I do. It's unbelievable to me when I drive down the Kennedy Expressway and see that there's all bunch of idiots, including myself, who just own these missiles that go 95 miles an hour. How serious is your barrier against this transition?
I think as any technology should be, I think it should be completely optional, right? I think you should have the right to decide. You have the iPhone now, and you had like the flip phone. There are still people that don't have a smartphone. That's totally fine. They don't have to, right? And you have people that would die without their smartphone. So I think as all technology should be, it should be optional, and you should decide what you want to use and what you don't want to use, and you shouldn't have the government telling you what you should have to use.
I drove a Tesla south of where you live. There's a Tesla dealer, Tracy, and I drove the new Model Y the other day, and I was telling Jimmy about this too. I was fascinated. So for people who haven't heard this story, because you don't listen to us every week, I should tell you to go F yourself, but I'm glad you guys are listening now. Essentially, I went to a Tesla dealer and they give you a 30-minute test drive and they just say, okay, have fun. And the salesman said to me, he goes, do you want to try the full self-driving? I go, yeah, that's half the reason I'm here. And he goes, okay, you know how to use it? I go, absolutely not. He hits a button and he goes, take me to Venetian Village, which is a place in South Naples. And he goes, hit that button when you're ready and take your foot off the brake. And it just went. I was like, I'm like, I've seen videos of like women putting on their makeup, a guy tying his tie, another girl had a saucer and a cup of tea, and she's drinking while the car's driving her somewhere. I was absolutely fascinated by it. Absolutely fascinated. Yeah, and I just thought it was so cool, and it almost pushed me to buy the car. It really did. But I didn't buy it because I just like loud engines.
Yep.
And there was no sound.
Yeah, that's no sound thing bothers me, and also not being in control of the vehicle bothers me. But I'm just kind of
Jimmy, do your stats, Jimmy.
That way.
I'm not trying to convince you, Tracy. I'm just trying to tell you.
I'm just trying to say, I'm trying to justify why I'm for it, particularly for someone. The new car we got, by the way, I always feel is reporting on me to Central Command. I think they have a file on me wherever they are. This guy goes 95 miles an hour sometimes. Yeah. So I don't like it.
It'll take some getting used to. Go ahead, Jimmy.
We talked about commodities and technology, and we got about 5 minutes left. And I want to know if there's any other specific sectors that you think there's opportunity in the next year or so.
Well, obviously, again, I think commodities. I think a lot of commodity equities. If we turn not just to the futures markets, but I think at least in the meantime, I think there are some steel stocks that look very interesting in the U.S. because of this raise of 50%, and some aluminum stocks, I think, that look really interesting, playing on just what's going on right now with this. Who knows how long 50% is going to last, but that trade has worked well over the last 2 days since he announced it on Friday. But I think some nat gas stocks look very interesting, particularly still midstream, which is I talked about at the same conference you talked about, was kind of that midstream, which that has worked out well, since I last spoke about it. Just because of the export capacity that we're building out in Louisiana and Texas, and we need more pipelines and things of that nature. So, there's a lot on the equity side that I'm also looking at, and a lot of, that I've talked about for a while is junior uranium miners in the U.S. I think also look interesting. I think junior miners in general in Canada and the U.S. in metals and mining look very interesting, just because I think we're going to get more protectionary, and it looks like it looks like if you look at the China-U.S. situation, even when we sort of had to deal with them 5 minutes ago, what was not included was still critical minerals. And so there are a lot of smaller miners in the US and Canada that I think are worth looking at.
So if I could, there's a couple more comments on here before we finish up, Jimmy. And one is from Sterling's first comment.
Love
Good
Sterling.
afternoon, guys. I've been in Palantir since 3430, which is like October of 2024, somewhere around there. And I'm trading around a core position as Mike Arnold teaches. That is a really cool thing, by the way, that Mike Arnold teaches. So if you guys don't watch his free daily live streams, Sterling sort of acts as an administrator on those. Then there's from Remo again, it's stock charts. Insurance policies will change in the future. Autonomous will be like 300 a year. If you want old school drive, it will be like 6,000 a year. They'll force you into Waymo. That to me is interesting for companies like Uber, because they'll basically be forced to go to autonomous if that's the case, because they'll have to raise their rates for the drivers to make a living. So that's just a comment.
No, I agree. I agree with that.
Can I backtrack a little bit?
Sure.
Because of electric cars and self-driving, we've actually seen insurance rates increase. Maybe at some points they will decrease, but right now, insurance companies don't want to take a total gamble on that. So it's raised insurance rates actually.
Why do you tie it directly to the self-driving and the electric cars?
It's not directly. It's to EVs.
It's all cars.
It's I know, but if you're an insurer and you're insuring all sorts of automobiles, and your payout is larger on, say, EVs, which it is because,
of course.
Right, the repairs are much higher, and just replacing a battery is like 12 to 24,000, depending on what you're driving. And so, since they're taking on that risk, unfortunately, it filters down to everybody that they're insuring. They have to raise your rates for everybody, because the payout is so large on this sector that they are insuring, and that's just the nature of that particular industry.
Right. I think where he's right on this, and I could be wrong, this is definitely like a bet, a trade, right? Is that once the accident data starts to fall in favor of the autonomous cars, it'll level out.
Oh, absolutely. Then it'll obviously sure. But it is insurance company, so don't expect that to happen tomorrow.
I have a theory, Tracy, that there'll be fewer accidents with self-driving, but every self-driving accident will be fatal.
Why do you think
catastrophic failure?
Okay.
It'll be like all of a sudden the car doesn't see the oncoming traffic anymore. That's why I think that is.
Therein lies the inherent risk that if something mechanically goes wrong with the car.
Great.
Yeah.
I'm just one of those people. There's one more, Jimmy, but I ride a motorcycle without a helmet, because if I crash, I don't want to be paralyzed. I want to be dead.
Yeah. That makes sense.
Sterling said, if you were going to do a pairs trade in commodity, Tracy, which one would you do? Then that's the last one. If anybody's
love this question.
What? A pairs trade. I like long platinum, short palladium. I like.
A great question.
Yeah,
that's good.
I thought you were going to answer differently. See if your next one you're going to answer, because based on what we've talked about, I had an idea. So, I thought you were going to say long gold, short crude. What do you think?
Yeah, you could do that.
Bobby?
Here's why I don't like, I'm kidding. I've been too argumentative today. I've never looked at those things. That's why I think that is such a great question.
Yeah. I love it.
Yeah. I mean, I really like that question. I might actually be long silver, short gold, but I don't like being short gold.
I know. I was going to say that too, but I don't want to be short gold. So.
Yeah, I don't want to be short gold. So I just, silver should catch up. I mean, I think the gold silver ratio is moving permanently higher, but I think it's gotten pretty wide at points. I'd have to look into that. I don't know that I can actually answer that. So good on you, Tracy.
All right, let's wrap it up. Before we do, I just got these glasses in the mail. Do they have like a yellow? Do I look like Mo Green in The Godfather with those lenses?
Look 100
when you're inside. I look 100. Well, I feel 100, but
no, they don't look yellow. Did you try yellow? They don't look yellow.
No, they had like some blue blocker function that I didn't see, which I don't even know what the hell that means. So y'all ask me.
I'm Mo Green. I made my bones.
Anyway, let's wrap it up. By the way, this is Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's Tracy Schuchart. If you don't follow her on Twitter, you're missing out. I know most of you do because I see she's got like 500,000 Twitter followers, and she's about to say, no, it's 750,000. But anyway, she's got most of you do. But if you don't, follow Shy Girl. Follow everything she does. She is brilliant. We are so fortunate to have her as a friend and a host and a guest on this show. Thank you guys so much.
Absolutely great human being.
Yeah. And thank you guys so much for joining us. And all the interaction we get on this show is fantastic. There was about 8,000 live viewers watching the show. I think 7,000 was because of me. And then the other was split those other guys. No, it was because of Tracy. That's what she wants me to admit live, and I will. But thank you guys for joining us. If you want to talk about some of these topics further, please join us at our newsletter, The Unfiltered Investor. It's on the Slice app. Watch the Futures Edge. Watch the Tradiers, the Trader's Edge. We love talking with you guys. Thank you.
Actually, Jimmy, real quick, tomorrow it will be on the unfilteredinvestor.com as well.
How about that? The unfilteredinvestor.com. Go there.
Cheers, guys.
Cheers. Thanks, guys.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.